Hey guys, welcome back. In this particular video, we are going to talk about conventions of accounting. Like in our previous video, as we discussed the basic concepts of accountancy, now conventions. So, conventions are like pillars for the accountants. Okay, so being an accountant, whenever you're preparing accounts for any company, so you have to remember or you have to consider these particular conventions during the preparation. Okay, so like we have different conventions. So in this particular video we will discuss topmost conventions of accounting. Okay, so like we'll talk about the full disclosure, so we have materiality, we have consistency, so we'll talk about these ones. So these are basically, if you talk about the conventions, so these are basically, you can like you can say these are the pillars of accountancy. So whenever anyone who is preparing these particular accounts, so they have to consider these particular conventions. Okay, so here we have a list of conventions. So we will start with accounting for full disclosure. Okay, so the first convention is accounting for full disclosure. So now, like if you do, whenever you're preparing any accounts, so accounts, as we discuss what is accountancy or what is the role or responsibilities of these particular accounts, because on the basis of these particular documents, investors, they are making their future plans about that particular company. So there should be a full disclosure of information. Okay, so entries are made in a such way that they provide honestly all information relating to the activities of that particular business, because investors, they generally rely on those particular documents. So these particular documents should be in a manner where like they can investor, they can easily understand these particular documents, or even like whatever the value is generally provided by the organization. So there should be a proper disclosure of all things about that particular company. There are so many companies who generally manipulate their accounts, so later on they suffer a lot. Like we have a case of Satyam Computer, or even many more. Okay, so disclosure of material facts, all things, whatever the debit credits is, or whatever the investment made by that particular company in different areas, liability, whatever the liability belongs to that particular company, and market value of investment. Okay, let's say that particular company made some investments, so they have to disclose whatever the profit or losses they are making from these particular investment. So they have to disclose these particular facts in their accounts. So that is generally known as accounting for full disclosure convention. Hope this is clear. Next one, consistency. So now convention of consistency is basically, let's say, for depreciation, for the calculation of depreciation, you are using some method. So throughout the financial year you have to use same method. Okay, so that is there should be a consistency in like in the calculations, or in the in that particular data representation. Okay, so convention of consistency, if a method is selected for recording and reporting purpose, it must be regularly followed in future also. Okay, and even let's say if you are making some changes, so you have to disclose that particular thing as well. Okay, let's say if you use from last 2 years you are using some different method, now you come with some new method, so you have to disclose that particular information to your shareholders. So that is generally known as convention of consistency. So hope this is clear. Next one. So next, if you talk about the next convention, it is about all possible losses to be taken into consideration. This is very important. Let's say if we made an investment in some project, and we are assuming some loss from that particular investment, so you can consider that particular one in your sheet, in your books. Okay, but if you have some expected profit, so that is you cannot include that particular thing in your books, or in your in your reports. Okay, so I hope you guys remember when we read about the concepts of accountancy, so there was a concept of realization. So this is something related to your realization, but it allow, if you are having some losses, so you can consider that particular thing. Okay, so creation of provision for doubtful debt, like in case of bank, let's say if you have some doubtful assets, so you can consider that particular one. So doubtful debt means, or doubtful losses means, which is like these are the borrowers from where we have a possibility of future losses. Okay, so you can consider that particular one, but you cannot consider future earning from any assets. Value of stock, whatever the current value of your stock, it is increasing or decreasing. So if it is increasing, so you cannot consider, but if it is decreasing, you may consider that particular one. Next one is creation of contingency reserve. You can create some contingency reserves, so that is also allowed under this particular convention. Next one, again, double entry system. I hope you remember this particular one. So every transaction has two aspects. One is debit and another one is credit. So if one's account is credited, so definitely the others accounts will be debited. You can't do entries both account debited or both account credited. So a scientific system in which the business transactions are recorded in book of accounts, in two account, one account is debited and another account is credited. Let's say you make a like there is a company XYZ Limited. Okay, so they made a sale of 5 lakh rupees. Okay, so they sell some item to Mr. Suppose there is a company, Mr. Messrs. A Limited, or whatever the name of that particular company. So here we have two parties involved in this particular transaction. So A account, Mr. XYZ account will be credited and this account will be debited, because like if you go for the basic accountancy rule, so you have to make two entries. You cannot debited both the account, you cannot credited both the accounts in that particular system. Okay, so crux of the accountancy is to find out which two accounts are affected with that particular transaction. Let's say this particular XYZ company is dealing with number of accounts, but in this particular transaction there are two accounts. One is XYZ accounts, another one is Mr. A's accounts. Okay, and which is to be debited and which one will be credited. So this double entry systems is we generally use in accountancy, and like for every transaction we have two aspects. One's account will be credited and another account will be debited. Okay, so conventions are like pillars for the accountancy. So being an accountant, you have to consider these particular conventions and you have to follow these particular conventions. Okay, so we'll have these conventions are same for all companies. So with this, or we have number of accounting standards which are again same for the all organizations. So with this we'll have a say we'll have uniqueness in the system, so investors they can easily understand the data, or even they can easily relate that particular data with the others. Okay, so these are some topmost conventions in accountancy. Hope these particular one is clear. So in next video we'll talk about the other aspect of accountancy, or we'll talk about the golden rules and all. Okay, so hope you enjoying these particular videos. If you like, please do share with your friends. Thank you.